This is Eric Muathe, Muathe.com. Let's take a look at BYND. This is for June 18th, 2019. Markets having a great spike in the early session here. And let's take a look at BYND, which has definitely been one of the leadership stocks over the last couple of weeks. And just want to take a look at what's happening here. We've hit a nice 200-day price, 200 price level. And we can see right now there seems to be a reversal in the stock, and it's something to pay attention to, in the sense that if the market is truly in a bullish mode, leadership stocks should not be faltering. Now let's take this recent daily closing high, and that is at 168.10. We can see that yesterday we closed above that level, and now the trick here is the stock needs to hold above that level. Otherwise, failure to hold 168.10, movement below this price, this becomes a failed breakout, and we know that failed breakouts are pretty much red flags. So failure to hold 168.10 is not going to be a good sign for the stock, and I would also say by extension would not give a good message about what the market's next short-term swing trade direction is. In other words, if this fails, chances are very high this also spills into the market in terms of the market sentiment. So 168.10 is a level to watch. Anything below this becomes a red flag for this stock, and also short-term for the general market. We also continue watching here. Should we see RSI 69.1 uniform activity rejection? If it plays out that way, in other words, if over the next couple of days we see this being rejected, RSI back below 69.1, and it leaves uniform action rejection, not a good sign. If you take a look at the 2-hourly, already we can see this is developing into a bad sign for this stock. Why? Well, take a look at this close on a 2-hourly chart. This is at 176.61. And as of right now, this is turning into a failed breakout on the short-term 2-hourly chart. Not a good sign. So on a short-term basis, this is already giving us a red flag. On the 2-hourly, looks like this stock, in my opinion, is poised for a major reversal lower. Also take note of the fact that right now we have RSI 69.1, uniform activity rejection. That RSI 69.1 uniform activity rejection is just confirmation of bearish look. So it does look like here we are setting the stage here for a massive reversal lower. We have this also improvement in prices with declining RSI strength. That clearly is negative divergence. So you put all these things together, it looks like this is going to reverse, and as long as it is failing to hold 176.61, this also shows that on the short-term basis we are already seeing a sell signal, and I think ultimately this is a tell of where the market is going to be going in the short term, which is for a pullback from current levels. We might look back in the days and weeks ahead and see that today was a reversal day, or at least a trap day, and the reason for that was to trap anybody who was short. So two things happen here: trap anybody who was short, let them get out of those positions, at the same time attract people to go long here. So you achieve two things: you get the bears to pretty much, you short squeeze the bears with this move, attract more buyers, and ultimately flip this thing around, and everybody is pretty much in the wrong direction, in the wrong trade. So we'll see how it goes. So 176.61 on the 2-hourly, 168.10 is pretty much a level to watch for failed breakouts, suggesting a move lower is imminent, and a big one at that. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S.